I am not your regular SMC trader. I have taken a step further to modify the strategy that has been, add new concepts, and then introduce new rules into the game that is going to forever change the way you view the market and how you trade SMC strategy. Stay with me as I give you advanced SMC strategy in 4 simple steps. Firstly, I'm going to take you on directional bias. Under directional bias, I'm going to give you 3 different types of market structure, how they work, how they can enhance your trading, and how they can help you consistently. Secondly, I will take you on a proper pullback. In my last video, so many people asked questions. Please guide us on how to take a proper pullback. I'm going to explain that in detail in this video. Thirdly, I will take you on point of interest. Then where the update comes in, LTC confirmation. Stay with me to the end of this video and I will change the view of which you look at the chart. I will break down how I and my community consistently generate 10 risk to reward ratio in a simple trade. What you are seeing on the screen here is basic market structure. Now pay attention. When you approach your chart, the first thing you want to look out for is to understand the direction at which the market is going to. Is the market ranging to the upside or is it going to the downside? The first thing to do in that aspect is to mark out your previous trading range clearly. You see here, we have a high, we have a low. This signifies the previous trading range. So you mark it out clearly where this becomes our swing high. Then we have this SL stands for swing low. Now, this clearly indicates that we have a high and a low. The next thing we want to see where the market breaks out from. Now we see that the market pull back. We are expecting that the market breaks out from the swing high or the swing low. If the market breaks out from the swing high, that means that we are having bullish price action. It means the market is traveling to the upside. Now, if the market should break out from the low, it means the market is traveling to the downside. It means we are having bearish action, right? So in this scenario, we can clearly see that the market pull back to a certain level of supply and then continues to the downside, disrespecting the swing low. That becomes a break of structure to the downside. So clearly we can see that the market is in a bearish trend. So immediately markets travel past this swing low. This swing low lost its validity to hold us as the lowest point of this very trading range. Now we know that this structure has been disrespected, causing this swing low to automatically becomes a break of structure. Immediately you see this, you kindly update the new low. Now you see you have another swing low here. You mark it out clearly. You have a swing low. The next thing you do is you update the swing high. This swing high signifies the highest point of the previous trading range. Now by marking this, you already know what you want in the market. Now where we are more focusing is things that are happening inside of this trading range. You get? So as SMC traders, how do we come about getting opportunity from this market structure? When the market is pulling back to the supply level, we look forward to cash trades from cash buys to the supply. You get? We cash trades from here, high risk to reward ratio trade using LTC confirmation. High risk to reward ratio trades to the supply level. When the market is done with the pullback, what do we do again? The same thing. When the market pull back to the supply zone again, we tag in with the help of LTC, get high profile trades again, and we sell at the swing low. We take profit at the swing low. See it? This is just what we do. You get? LTC is going to make this much more easy. Stay with me. Immediately market pull back to this supply zone and then come back and take out the swing low. Immediately this swing low becomes a break of structure because this former swing low lost its validation to be our swing low. Hence we have another low that is lower than this one. So this one here clearly becomes our break of structure. So we have a new break of structure. What do we do again? We update the highest point of that very trading range. See it here. This here clearly is the highest point. So what are we expecting? Immediately we have another swing high and then another swing low. We mark this one out every time. Every time we have a new trading range, we make sure we mark them out so we don't make mistake. So now we have a high, we have a low. So the market is pulling back to this swing high. Now we want to take opportunity from a certain level of supply back to the swing low so we can take out the swing low. How about the situation where the market travel back to the supply level, disrespect the swing high by breaking it? Now that means that the market has shifted from going bearish to going bullish. We are looking out for opportunities to trade from this zone. You can see it. We want to trade from this zone here and then to the swing high. So here this becomes our swing high and then this here remains our swing low. So we want to take out opportunity from this place with the help of LTC and then we sell at this zone here. It's just as simple as that. You get? Now this is basic market structure. We are going to head down to the complex market structure. After the complex market structure, we treat the multi-time frame market structure. After that, we head up to the chart. Whatever I've teach you guys using the line, we apply it to the chart and see how it works. This looks very much more complex than the previous market structure. So how do you understand this in simple terms? It's just the same thing with a little twist. Now, to understand this is very simple. What do? Kindly mark out the previous trading range. Now we had a low and a high. Now we have a high and a low. That means what? We have a trading range. Everything that happens internally, we treat them as internal structure. Anything that happens externally, we treat them as external structure. In the multi-time frame market structure, I will elaborate more on this structure. But then what you should know at this level is that when the market is about to pull back, we take advantage of this, look for high profile trades with the help of LTC, and then push. Where are we pushing at? We are pushing and we are focusing on the demand level. Once we get to the demand level, we take our profit and then wait for the market to shift again so we can follow it to the swing high. Immediately the market pull back and then give us an expansion, taking out this swing high. Now this previous high lost its validity to maintain as a high since we now have a new high. So what now happens here? This swing high here becomes a break of structure, indicating that for the meantime the market is bullish. Immediately after this break of structure, what else do? You kindly mark out the highest point of the trading range. After you mark out the swing high, you kindly update your swing low. This here becomes the lowest point of this very trading range. So what are we expecting after this? We are expecting that the market should pull back to a certain level of demand and then give us buying opportunities from this level. So we can be able to buy the market from here to the upside. It's the same as the basic market structure. Just like this one here shows what the market does in real time. Immediately this new high here pull back to a certain level of demand and then give us a buyable opportunity from here for us to buy to the upside. This former swing high now automatically becomes a break of structure because this one here is no longer our highest point. We now have another new high. Now we have a swing high. This here is our swing low. So now what are we looking out for in this trading range here? So we have a swing high and we have a swing low. This here signifies the lowest point of this very trading range, and this here signifies the highest point. So we have a trading range. It's still the same thing. We are still looking out for opportunities that are happening inside of this place. So what are we expecting after confirming that? After confirming our market structure, what we are expecting that the market should pull back to a certain level of demand again, give us a buying opportunity so we can buy to the upside and take out the swing high. How about a scenario where the market pull back to this demand zone, disrespected the demand, disrespected the swing low? That automatically means that the market has changed its direction from an uptrend to a downtrend. So this swing low here automatically becomes a change of character. The next thing we want to do is we mark out the lowest point of this very trading range. What we are looking out for at this point is that the market should pull back to a certain level of supply and then give us an opportunity to take a sell and then take profit at the swing low. So that is exactly what we do every time. So it's always like this. You get immediately this pullback occur and we have another expansion that took out the low. This low here automatically becomes our break of structure. So immediately you experience that, you just quickly update your swing high. So after updating your swing high, it's just the same action again and again and again. A pullback, a continuation, a pullback, a continuation, just like that. Another pullback again, another continuation, another pullback, until the market is ready to change character again. Then it changes. You get this becomes our change of character. So it's just the same thing, just like that. We are going to go down to the multi-time frame market structure so I will explain how that works. This here is a market structure that has to do with two time frames. The first time frame is the 4 hours time frame, which is represented in black color, and then the 15-minute time frame, which is represented in red. What you are doing is not different from what you have been doing before. First, you want to understand the direction of the 4 hours time frame. You mark out the previous market range. Now we have a swing high and a swing low. What the 15-minute time frame do for us is that it gives us a detailed information about what the 4 hours is talking about. You get, imagine the 4 hours want to give us a pullback. The 15-minute time frame will easily give us a change of character from the very 15-minute time frame, indicating that the 4 hours time frame is about to pull back to a certain level of demand before the buys continue. You get, so what do we do in the 15-minute time frame? We get a pullback from the 15-minute and then we tend to follow the movement of the trend. Now, once this pullback occurs, what do? As people that are trading the advanced SMC strategy, we kindly look out to take high profile trades from area like this. and then we target the demand level, because we have a fair understanding that once the market gets to the demand level, it will then give us another confirmation that it really wants to buy, and then we follow the buy again. So 15-minute time frame basically give us a detailed information of what the 4 hours time frame is talking about. When the 4 hours gets to this point, what the 15-minute does is that it gives us another change of character, indicating that the 4 hours intention to expand after this pullback here is actually true. The 15-minute time frame gives us another change of character again. We get involved, we look for an entry opportunity from the 15-minute time frame again. Upon proper LTC confirmation, we get a very high profile trade from here and delivers it at the swing high, you get, and then we get massive profit. You understand? So this is how this time frame operates. I've taught you basic, complex, and multi-time frame market structure. So I'm going to take you guys now to the chart so that we can go and apply all these things and see how they work. So far, if you love the way I take time to break things down, if you really understand the way I teach, kindly subscribe to this YouTube channel, share this channel to other struggling SMC traders so they can get involved in the advanced SMC strategy and also consistently generate profit. Subscribe. Before we get to step 2, that has to do with a valid pullback, let's quickly run down a market structure check in this chart. Now you arrive your chart, you see the chart in this manner. What did I tell you to do? Mark out the high and the low of the previous trading range. Now everything has become clear. We have a swing high, you have a swing low. This is the previous trading range, have a high and a low. We had a break of structure here that indicate that the market was initially bullish. You can see that. So what are we then waiting for currently in the market? Now we are waiting for this market pullback to either break out of the swing low or the swing high, so we can determine the next direction of the market. So as you can clearly see here, it's very clear that the market broke out of the swing high, causing the swing high to become our break of structure, indicating that the market still continues its bullish action. Immediately you discover this, you kindly update the lowest point of that very trading range. This becomes our swing high. The next thing we are expecting in the market is for the market to pull back to a certain level of demand, so we can be able to take high profile trades and then take profit at the swing high level. Okay, so it's just as simple as this. This is 4 hours time frame activities. Now this is where I introduce you to the second step, which is a valid pullback. For a pullback to be valid, we need to see at least 3 candlesticks pulling back simultaneously. You see, this one is pulling back, this one is following the step, this one is following. So this can be called a 3 candlestick pullback. At least we need to see 3 candles pulling back. 1, 2, 3. At least there must be 3. But the more candlestick that pulls back, the more strong the zone. You get, but at least 3 candlesticks at each time frame. You get, be it 4 hours, 15 minutes, or 1 minute. At least 3 candlesticks is okay. So for a pullback to be successful, we need to see 3 candlesticks, either pulling back to the downside or the upside, vice versa. We can now say that this pullback here is valid since we have a 3 candlestick, 1 black candle, the second black candle followed it immediately, the third black candle. So this here can be considered as a pullback. So we are going to go inside the 15-minute time frame, because if the 4 hours intention is to pull back, then the 15-minute time frame needs to give us that information. You get. So let's get down to the 15-minute time frame. This here is a 4 hours time frame trading range. From the 15-minute time frame, let's see what is going on. You have been able to understand that you have a break of structure, you have a swing high, you have a swing high, you have a swing low. Now it is very clear that you are very much interested in things that are happening inside of this trading range. And I dropped this setup with my community exactly like this. Now what we are expecting is that the market should pull back to this level, so it's to give us LTC so that we can push to the upside. Now the market got here, it didn't give us LTC, indicating that the smart money intentions of pushing the market up is no longer there. So the market played around in this place for a while. SMC traders that place their limit order here and then they target this place here, they got liquidated because they don't give respect to the advanced SMC strategy, so they got liquidated. When the market got to this place, it disrespected the swing low, making it to become a change of character. The 4 hours intention to pull back is now very clear in the 15-minute time frame. What do you do at this point? You look forward to sell the market from a supply level. The next step we want to look out for point of interest. Here are criteria for choosing a proper point of interest. Number 1, a point of interest must have an order block. Secondly, a point of interest must have a fair value gap. Thirdly, a point of interest must have liquidity, or your point of interest is the liquidity. Now in gold, those rules are being altered because there is a pattern that gold moves and it works 90% of the time. Gold use breaker blocks a lot. This is just a little hint I've given to you. Take this to your chart, go and back test and see how gold respects breaker blocks. Now we have another block here that meets one of the criteria of a point of interest. We have another block. This other block has a fair value gap, but it doesn't have liquidity. that is where LTC comes in, because LTC makes us take trade even when there is no liquidity, because LTC confirms that the direction is right and then we get involved. You understand? So then see this breaker block here. This breaker block corroborating with this candlestick overlap. It's a very strong resistance or support zone. So each time you see this around your point of interest, mark it out clearly. If LTC comes here, you take the trade. If LTC comes here, you also take the trade. This is only applied to gold, SAUUSD. We are going to play price and see if price come here, then we use LTC and enter. If it comes here, it gives LTC, then we enter. So let me introduce you to the concept of LTC. What is LTC? LTC is a 1 minute time frame confirmatory pattern that when traded properly, it gives you one, a high risk to reward ratio. Secondly, it auto confirms to you that truly the market is going in your direction. So in this aspect, we are expecting a sell. What we want to see in the 1 minute time frame is that we want to see a break of structure to the upside. This is what we want to see on the 1 minute time frame. The last break of structure to the upside, indicating that we are still bullish, and then in our point of interest, we want to see a change of character. Immediately after this change of character, we get a 1 minute time frame point of interest, and then we place our trade exactly like that. This has been proven over and over and over and over again. If you know me too well in this space, you know that if I don't have this criteria, then I am not taking the trade. Okay, that is exactly what we want to see in either this zone here or this one. So let's play price and see, guys. Action. Okay. Okay, the market has gotten to our first point of interest. You can see it clearly. So we step down to the 1 minute time frame and see how the market behaves when it gets there. And again, if this zone is not going to hold, then the market is not going to give us LTC. So we have a break of structure over here, and then we have another one over here. Remember the criteria of a pullback. We have another one over here. This also meets the criteria of a pullback. See it over here. For a pullback to be valid, it must have 3 candlesticks pulling back consecutively. We had a break of structure here, we had another one here, we had another one here, indicating bullish action from the 1 minute time frame. It means that the 1 minute time frame is bullish. Until the 1 minute time frame turns bearish, we are not taking any trade. So this here is a 1 minute time frame swing low. So this here is the 1 minute time frame swing low. So if the 1 minute really have any intentions of respecting this breaker block and then coming down, it means that it has to disrespect this swing low. But if the 1 minute time frame pull back to a certain level and continue going up, it means that the market still have intentions of pulling up. So we play price and see how price wants to behave over here. So let's play price. Okay, good. Now the 1 minute time frame has disrespected the swing low, so we mark it very clearly. 1 minute time frame has disrespected the swing low. So now the 1 minute time frame disrespected the swing low, change it into a change of character, and then what we are expected to do is that we mark out the highest point of this very trading range, where this becomes our swing high. This becomes our swing high, indicating that it's the highest point of this trading range from the 1 minute time frame. So now we hope to look out for a proper point of interest at which we are ready to react from. So what we are seeing from the 1 minute time frame, we are seeing order blocks. We have this order block over here. From the 1 minute time frame, we have this order block. Then we have this one, and so on. So we have 2 recognized order blocks here. So we want to look how we can manage the both of them and then get a little stop loss. Get a smaller stop loss, so we can have a high risk reward ratio. So we are going to consult 3, 5, and 15 minute time frame. So we're in the 3 minute time frame currently. The 3 minute time frame is concurring to the both order blocks that they are both valid. So we check out the 5 minute time frame. The 5 minute time frame is also saying that they are all good, but then the 5 minute time frame is indicating that it's here. But then let's check the 15 minute time frame. Okay, the 15 minute time frame has even concur more to this order block. The 15 minute time frame is saying we should mark it from here. Okay, if we mark it from here, it means that the stop loss will be big, and if our stop loss is very big, then our risk to reward ratio will be very small. So we refine it again. to the 1 minute time frame so we can get a proper. Okay, we'll just keep it here. Okay, keep it here, keep it simple, and then place our trade. We have been able to like check out LTC has been confirmed. So let's go to the 15-minute time frame and then look for where we want to take profit. So we have the 15-minute time frame swing low over here. So we can clearly see that we have the 15-minute time frame swing high, the swing low. Then we have the 4 hours time frame demand zone over here. So you can either take profit here or you take here. But for me, where I mostly take my profit is at the 15-minute time frame swing point. You get, because after the market take out this swing point, the market will still pull back to a certain level and then continue. So if it pull back again, I use 1% from here and then add up again and take another trade. So I usually take my profit at the 15-minute time frame swing point. But taking it here is also not bad. You get, it will give you a high risk to reward. This is about 16 risk to reward ratio if you are taking here. But if you are taking here, it's 8. This 8 risk to reward ratio is 100% guarantee than this 16. So I would just prefer to take my profit here. So let's go to the 1 minute time frame, play price, and see if price tax us in. Another thing is that you keep your stop loss a little bit above the high, because most time market will come and play the highs and take out all the people that were having stop losses in that very place. So let's play price and see. Okay, the market has even taken the second place here. Although this first one is enough, the market has taken the second one here, indicating that truly the intentions to sell was there. So let's keep playing price. Okay, we are in, we have been tagged in already. So let me. So we are tagged in already. Let's speed up price and see how it works. I don't want this video to be long. Market is playing around our. See what happened here. When the market came to this first point of interest, it tagged it in, respect it for a while, liquidated the point of interest, and then tapped into the second one. Okay, so this happens a lot. So most time I tend to like cover the both zones so that even if the market tap in only this one, I won't miss the trade after much refining of my entry. You get, so as the market is moving like this, we keep on playing price. But then if our stop loss was here, this trade would have been a 14 risk to reward ratio trade. But because our stop loss is here, this trade is a 8 risk to reward ratio trade. So let's play price and see how everything works. Now, when you see the market moving aggressively like this, what I often do is that I break even. What is the meaning of break even? Moving your stop loss to your entry point, so that in case things go wrong, you'll be out of the trade. You get, in case things go wrong, it wouldn't affect your capital. You understand? So here the market already moved about 6 risk to reward ratio. So we keep on playing price and see how everything plays out. Wow, you can see that. See this delivery. Immediately market cleared out 8 risk to reward ratio and immediately targeted the 4 hours time frame demand level. You see, even liquidated people that have limit order over here, swing traders basically, because swing trader plays and then forget. See, liquidate them with strong liquidation. So here it's just simple things we did. It's not complex actions. We were just following the 4 hours time frame direction to pull back, and then we got involved, and then 8 risk to reward ratio clear. Pretty much simple. I have a community where I share free directional buyers to them so that they can consistently generate profit. If you know you're an SMC trader, you love how we do things, check the link in my bio, join my Telegram platform where I share free directional buyers every day to my community. Okay, so subscribe to this YouTube channel for more video breakdown like this, and then drop a comment and tell me what you wish so that I will treat it just like I treat the proper pullback session. You understand? The only way you can get better in the market is to practice. Take this back to your chart, practice it over and over again until you get used to it. See you in the next video, guys.